Hey guys, this is Mark Shawzin, the Pattern Trader. One of the most often represented questions I get during webinars, our Master Pattern Trader sessions, and other formats is, how does one cope with the drawdown? How does one cope with a losing streak? Now, this is obviously a topic and a response that would take a considerable amount of time. But I'm just going to share with you a couple thoughts that I use in order to deal with this. First off, just like the market prices in certain events, certain news outcomes, the market is a discounting effect. I think we as traders, have to price in a losing streak. And so you have to ask yourself first off, can your methodology, hold up to a losing streak? What kind of losing streak can it hold up to? What kind of losing streak can it withstand? Meaning, if you got 10 losing trades in a row, what would that mean to your account? What is your risk management to accommodate that kind of losing streak? So I think mentally, as well as the components of discipline and risk management, are as important, or I would argue even more important, to any trading strategy. I think most traders, romance and glorify entry methods. If only I could just enter a trade in at the right point. If I knew where to put my stop loss, if I knew where I put my take profit. But those are, obviously nice components, and you have to have a trading plan. But ultimately, you have to understand your methodology, and you certainly have to be able to price in a losing streak. So I always know, the markets, just like anything else in life, doesn't go straight up. There are times where it goes sideways. There's times where your strategy is not working. And so I automatically just price in that 3 months out of the year, I'm going to be losing money. And then I have to, set up my trading system, my trading account to withstand any and all kinds of losing streaks. Now, the one thing that I do, just mentally from a visualization standpoint, is that to my mind, when I'm going through a losing streak, I actually get excited. Now that sounds crazy. It sounds counterintuitive, but it's the more I'm losing, the more I know within myself that it's just a matter of time before something presents itself that I'll understand and that I will be able to, lob on to a winner and make up for all of those prior losses. It's kind of like when I was a stockbroker. We were, being, in these trading rooms, we'd have to make cold calls all day. It was really a soul depriving kind of endeavor. But, what our trainers would say, look, the more no's you have, it means the closer you're getting to a yes. And I've kind of taken, that kind of mentorship, if you will, and that kind of training into my trading, knowing that the more, I'm frustrated, the more things aren't happening. I also know that I'm getting closer to something that I can understand. And when I understand it, I'll be able to, get aboard that trade, and it will make up for all of the prior losses and then some. And that's exactly what happened in the last month or so. My trading has been very sideways. I've made some bad calls on Pound New Zealand and some other trades. I've gone up and down and mainly backwards. But I found one trade in the gold market that has made up for a month's worth of sideways trading and then some. I was saying in the July-August timeframe, when gold shot up to from $1,800 to $2,100 in 3 weeks, that was likely going to represent a crescendo. That kind of frenetic activity in a moment, I'm going to go to the real-time charts and show you exactly what I'm talking about. But in a 3-week period, gold shot up, in early July and into August from $1,800 to $2,100 in 3 trading weeks. That means in each weekly trading bar, it averaged $80 to $100 per week. Now, when I saw 3 of those bars appear in a row, I was saying to our members that was likely, an emotional chase to the top, And this always represents, when you have this increased volatility, some kind of change and consolidation or even a change in direction. And I was starting to peel out of my long positions when I saw that. And then over time, I saw this triangle, this price pattern that, I've recognized a million times in my trading. I know exactly what it represents. I started getting very excited. And as I did, and as I advised our members, we started building short positions around the $1,900 level. And gold collapsed this and last week to $1,750. And in that collapse, I made a lot of money. I know some of our members made a lot of money. And now I'm going to go to the real-time charts and show you exactly what I was looking at. How when I find these things, when they're mature enough, I know what I'm looking at. I kind of step on the gas and make up a lot of lost ground and then some with these kind of trades. Before I go to the real-time charts of XAU USD spot gold and examine the price action there, I just want to refer to a couple of emails that I sent to our members. In this one, on Monday, November 9th, I started advising our members to start looking at selling gold at a sell limit of 1871. Now you can see very clearly this descending price pattern. These descending price patterns have clear implications for me. I've traded them 1,000 times. I know what they represent. And in this case, I was pretty sure that we were going to have a big move lower. In my analysis, I said gold has been forming a descending triangle bear price pattern. We broke out of the descending triangle. Turns out it was a giant head fake and bull trap. Again, I'll go to the real-time charts and show you what I was looking at the time. And then I said today's massive key reversal action is pointing in the direction gold is going to go, lower. My target is $1,750 or lower. In a follow-up email to our members on Tuesday, November 17th, just 8 days after my initial recommendation to go short gold, I recommended to our members to add to their position by putting a sell stop at $1,875. In my analysis, I said I'm currently short XAU USD, which is spot gold, at 1871 on the 10th. I am looking to add to my position. Gold has been trading within the cadence of a descending triangle. A descending triangle price pattern is a neutral price pattern. Prices could break out either way. However, I said in this case, gold has retested the low price of 1850 so many times, suggesting the next major breakout will be to the downside. Now I'm going to go and examine the real-time charts of gold and see what unfolded after my analysis of this descending triangle. So you can see the descending triangle in this particular email with the sloping downtrend line against the horizontal line, which connected all the attempts at $1,850. We had what's called an inside bar, which is a coil in my mind to unleash prices in the direction as indicated by the prior pattern. In this chart, I'm looking at the weekly chart of XAU USD. This is the ticker symbol for spot gold. And this was the time frame that I was indicating in my video, where you had a gigantic expansion of the range and volatility in XAU in early July leading up to early August, where gold literally leapt from $1,800 to $2,100 in just a 3-week time frame. And you can see in contrast leading up to that how orderly the cadence of the market was, meaning that the weekly range from high to low was minute compared to the expansion of the weekly range. And what I mean by the weekly range is that you can see from low to high of each one of these sequential 3-week bars, you had a major explosion of $80 to $100 in each of those 3 weeks. Whereas preceding that, you can see that we had these very small ranges, very orderly ranges leading up to that explosion. And it was this explosion that led me to caution our members to start exiting their trades at the top of this market. Now, it was after this expansion of volatility that I started to sound a voice of caution to our members. suggesting that they sidestep this market, get out of the way, as I thought it would go into a consolidation phase and quite likely go lower. Now, this was bold at the time. Gold was bolting up from one level to the other. We had huge quantitative easing. It was in the depth of the coronavirus, and everyone was predicting that gold would go to the moon, when I was holding these visceral feelings that we were actually going to roll over and go lower, which is precisely what gold eventually did. So after gold bolted to the $2,100 level in August for the following 3 or 4 months, you can see that gold started going sideways to lower within the cadence of this descending triangle, where you see this sloping downtrend line which connects all these highs. You can see that the steam was running out of gold. Every time it tried to go higher, it was much less than the previous attempt. So you had this cadence of descending lows which formed this descending triangle. Now at the same time, every time you met with a lower high, you met with an equal low around the 1850 to 1860 level. Now you can see that we made 6 attempts at this particular level between the 1850 and 1860. And these multiple attempts at this support line suggested that we would not get a sustainable release out of here to the upside. It's my thesis that if a market is good, it's just going to giddy up and go. It's not going to give you 6 opportunities to get long. Now, there was a fake out along this area where you had this head fake where you broke out of this descending triangle. But as you can see, it's what I call a head fake or a bull trap, where people buy the breakout only to see it collapse back within the cadence of the triangle. And by virtue of the fact that we hit this low so many times prior to this breakout, I was advising and cautioning our members not to chase this, as I held this conviction that we were trading within this unconventional descending triangle and would eventually break to the downside. Now I'm looking at XAU USD spot gold on a daily time frame, and on the daily time frame you can definitely see more clearly this descending triangle that we saw on the weekly charts, where you can see that we had multiple attempts at going higher, but each attempt was lower than the last. And then along the bottom we had these multiple attempts at this 1850 to 1860 support level. So the declining highs, the sloping of the lower highs, along with the multiple attempts at this support line, led me to conclude that we were going to have a huge break to the downside, notwithstanding that we had this head fake in this time frame where you broke out of the descending triangle. But again, it was my hypothesis that since we hit this 1850 to 1860 price level 5 to 6 times, that this was not going to lead to a sustainable rally on the upside. Now you can see on contrast, when a market is good, it hits a certain level twice and then it gets a giddy up and go. It doesn't give you 5 or 6 opportunities to get in before it goes vertical. So I was sticking to my convictions and looking at this as a descending cadence, and advised our members in this time frame to get short at 1871, and then upon this inside bar to get short at 1875. Now, in addition to this descending triangle, I was also observing this very clearly delineated head and shoulders bear price pattern at the time that I indicated to our members to get short. So once again, based on the observation of this descending triangle and head and shoulders, which looks just like a man or woman's right shoulder, the head, the left shoulder, the head, and then the right shoulder, we had this head and shoulders bear price pattern. And based on the observation of these two patterns, I indicated to our members to get short. Now, on the second position in which I added to my existing short position, it came right at this level where I observed what I call this coil bar this inside day or narrow range bar. You could see the range of that bar was very narrow, and it sat within the high and low range of the prior day. So I call this an inside bar. This is a coil, and when I see these bars combined with the pattern, then I reasonably concluded that we were going to explode out of this coil, which is exactly what we did, where we dropped from $1,900 to roughly about $1,760, $140 drop in just 1 week in time. And you can see it hit both my take profit at the 1870 level, and then I advise our members to take profit on the second position at $1,795. And I collectively bagged 1,340 pips on 2 of these trades in just 1 week. This is an extract from my trading platform where, as you can see, I went short gold at $1,875 and got taken out on a take profit at $1,817 and bagged a net profit of $261,000 on that trade. Now, this was in addition to an existing trade where I got short gold at 1873. I got out at 1795. I jumped the take profit because I suspected gold would bounce at this level. As it turned out, gold went a little bit lower, but has now bounced through this level. So I'm quite happy that I took profits there. And as you can see, I bagged about $350,000 on that particular trade. So in combination, bagged over $600,000 on these 2 trades. Now, I've also showed you a collection of some other trades that I took during that time frame, where I lost $32,000 on this trade, lost $52,000 on this trade, made $900 on this one. So this is a good example how one trade can overcome a bunch of losing trades or a losing streak where it could last for several weeks to even several months, where you can overcome that with just a few good trades that you can identify that are very mature. In the case of gold, we had a 4-month long descending wedge triangle, which I understood very well the implications of, and as you can see, I jumped all over it and capitalized on that move. So I hope you got a ton of value out of this video. If you'd like to know how to capitalize on these long-term trading strategies, if you'd like to be able to understand how to capitalize on price patterns and price action, then I highly suggest that you download our weekly video report. With that said, I wish you guys a healthy and prosperous trading week, and I'll see you next time.